The Swiss National Bank reduced interest rates by 0.5% last week, surprising many commentators. The Swiss franc went down by 1% against the euro. Is this a temporary move in the Swiss franc, or can we expect further Swiss franc weakness in the months ahead? Francois, hello.
Hello, Mark.
Thank you for joining us. Swiss National Bank, why did they reduce interest rates more than expected?
I would say that mainly it's linked to the inflation target of the Swiss National Bank, which is between 0 and 2%. And lately, the numbers on inflation are moving downwards. So I think that the main reason is the quote unquote deflation risk that the Swiss National Bank wanted to avoid. And that was the main reason because in terms of activity, yes, the late numbers are not particularly positive, but then they are not showing either a significant downtrend. I think it's mainly the question of inflation that justified the decision.
GDP numbers were revised down for Switzerland a few months ago from 1.5% to 3%. There's been no revisions since the drop in interest rates. Is that is that indicative that there is further room for the Swiss National Bank to continue to reduce interest rates?
I think that the key issue again in this case is inflation. What will determine the action of the Swiss National Bank will remain the inflation threat or the deflation threat. Clearly, in the way they speak after their decision, you had the impression that they took the risk of cutting a little bit too much right now for not having to cut again too quickly next year. First of all, you shall remember that the Swiss National Bank is meeting on a quarterly basis and decisions are made on a quarterly basis, which is longer than what happens with the different central banks. So maybe they consider that with the number they had in terms of inflation, CPI coming lower and lower in the last few months, it was time for them to make an interest rate cut insurance and it's not necessarily the sign that they are going to act very quickly in March or that they are going to repeat the 50 basis points. But that's the key element for them.
Can you envisage, for instance, the SNB going to zero on interest rates?
You can imagine that, and it's perfectly feasible. It's perfectly possible. It happened in the past. We had negative interest rates in Switzerland. Does it mean that they want to go back there? I'm not sure. And they are going to consider the inflation number if they justify such a move. And I think it would be a mistake to consider that the Swiss National Bank has decided that they will bring interest rates down to 0% or to negative again.
The downwards move on the Swiss franc against the euro wasn't that important, to be honest, bearing in mind the surprise in the markets. Do you think the Swiss franc is going to weaken from here?
No, I'm not sure. I'm not sure that we are in a process of a weakening Swiss franc. There is no reason, to my point of view, to justify such an expectation. By that, I mean that yes, we can stabilize in a wider margin, which will be between 0.92 and 0.95, 0.96. But I don't see a weakening trend. Don't forget that the ECB last week cut interest rates, and there, what is very clear is that the economic condition justify some more interest rate cut in 2025 and not one or two. Clearly, ECB need to act decisively in terms of interest rates. And I think that this is something that is going to move in favor of the Swiss franc down the road. Moreover, look at what happened on Friday. Moody's downgrade the debt, the French debt. Look at what is happening in Germany. We will have political instability in the short term because we have election in February. Look at what is happening on the international scene. I think that the Swiss franc will remain a safe haven value and that there is no reason to believe that there is a medium-term trend that is in place for the Swiss franc.
Many people expected the 90-cent level to be tested by markets. If the market does go down to those levels and start to test that, would you see that as a level where the Swiss National Bank would defend the rise in the Swiss franc?
Clearly, and I consider that maybe you will see that in 2025. You know, you have many things that would happen in 25. Clearly, the closer you get to 90, the highest the pressure for the Swiss National Bank to intervene on the forex market again, because clearly it is impacting the competitiveness of Switzerland. In general, it makes the exports problem a bigger problem, and we all know that over the course of the last few months, we had numbers that proved that on the export side, there was some suffering for Swiss companies. So yes, it is possible that we would see intervention next year by the Swiss National Bank.
So lower rates in Switzerland, a slightly weaker Swiss franc. Coming to stocks now, which sectors can benefit from this, if any?
I think that when you look at the general trend or the global trend on the Swiss franc over the course of the last few months, quarters, and years, clearly the exporters are the one who are suffering. So if you look at the trend, you would consider that it's better for you to be in financial stocks. It's better for you to be in stocks that are related to the domestic economy and less to the exports. So I think that you need to keep that in mind because this is very important. And if you believe that the Swiss franc weakness that we experienced last week is not going to last, you need to remain with this kind of positioning.
Are there any stocks in particular that you like in that sector?
I think that in the sectors, Swiss Re is a company that I tend to like. When I see a company moving the way it moved and reaffirming last week that you have some dividend yield that is going to be maintained around 7%, I think that this is an attractive company for the yield by itself. The dividend yield is quite attractive. And then, financial, you have some solid financial insurance, you have some banking company like UBS. Those are the companies that maybe are going to be the main beneficiary in such an environment.
Coming to the week ahead now, potentially it's going to be a volatile week for global stocks. There's a batch of US numbers. Let's go through them very quickly. On Tuesday, November retail sales, including Black Friday, I imagine.
Mhm.
Silly question, but retail sales, does that include online sales?
You have two measures. You have one with and one without. Yes,
So we'll have an indication of how Black Friday
yes,
went on
yes,
Tuesday, tomorrow then.
yes.
Wednesday, FOMC.
Mhm.
Thursday, third quarter GDP. That's a revision. Initial jobless claims on Thursday, and then Friday, core PCE price index. What are your comments on those numbers this week?
Clearly, the one that is the most significant one is the Fed. The Fed is going to come out with a rate decision. It's expected, and I tend to agree that it will be 25 basis points rate cut by the Fed. But what will be interesting is to hear Mr. Powell after the meeting and revealing the dots that the Fed members have decided to consider as their target, not only in terms of growth and inflation, but also where they foresee the short-term interest rates by the end of 2025. So I think that this is the key measure because look at what happened on the bond market last week. At the end of the week, we are back to nearly 4.4 on the 10-year bond yield. So there is some doubt emerging about the ability of inflation to remain under control. There is some kind of, I would say, volatility in investors' mind. So it will be very interesting to check what are the dots and what it means for the interest rates by the end of 2025. There could be some upward revision, and clearly the market is positioning this way. A few months ago, there were a lot of expectation about interest rates going in the US going significantly below 4%. Now the investors are reviewing those kind of forecasts and reducing the number of cuts they expect for 2025.
Coming to China now this morning, they released retail sales numbers. What's your comment on that?
I would say that it proved that many things that we have discussed in the course of the last few months. First of all, it proves that the deflation threat is not gone in China. And it means that you still have a very weak consumer. They have not been able to really push the consumer to increase its purchase. So that's something that is the first element. With a weak consumer, there is a need for action. For the time being, the Chinese, and again last week, they have disappointed the market because they came out with very good intention, but not many action. Clearly, they decided last week that they wanted to have lower interest rates and that they want to make something on the fiscal front to support domestic demand. Where are the measures? For the time being, they are not coming and they are testing the patience of investors. I think that those numbers were not very good. Again, and what is also interesting is to see that industrial production went up about in line with the expectation. But on the consumer side, you have this discrepancy between industrial production and consumer that is rising and rising. And this is not a good development for the Chinese economy in the medium term.
Bank of England, Bank of Japan, any comments there?
Very interesting. Bank of Japan. The yen is very weak beginning of this week, close to 154 again, meaning that the people tend to believe that the Bank of Japan will not take the risk to increase interest rates. I think that to me, it's a close call. Clearly, they will act. Will it be in December or have they decided to go for January? A market participant consider that it will be January. Very interesting. I would like to see if they can surprise the market by acting in December. By the way, this morning, PMI numbers came out of Japan. They were quite good. Were rising. And yes, the industry is still below 50, but it's rising to 49.5, higher than expected. So I think that's something that would justify to consider that maybe an action in December is warranted.
Bank of England?
Bank of England, no specific comment. Lately, you had some poor economic numbers. I think that they are going to go for 25 basis.
Francois, thank you very much indeed. That's all we got time for. Speak to you possibly next Monday.
Okay. Have a good day. Bye bye.
Bye bye.